Welcome to Huobi Research Weekly Market Chat. Today we are going to drop some very exciting content for you guys. First of all, we have technical analysis, and then we have on-chain indicator. We have made some shrimp indices and also some other on-chain indicators for you to get to learn more about what's happening with Bitcoin on-chain metrics. And also later on, we have stablecoin supply ratio and also CVDD, another indicator that I'm going to explain and share with you guys. So make sure you stay tuned. And after that, we have some exciting news like MT Gox BTC repayment announcement as actually not very exciting as depressing to the market. And later on, we'll discuss the reason for this event. And also later on, we have some NFT that we are going to share. That's a funny one, the Saudi's NFT. Some funny memes trending on Twitter, and we are going to share some funny stuff with you guys. And last but not least, we have Candy Drop and at the end, and also we have some Q&A section. So make sure you subscribe and also stay tuned to our market chat weekly, and we'd like to see you here. And let's start with the first part. We have some technical analysis for you guys. So right now, Bitcoin is standing at 20K, around 20K, 19,847. And if we look closely, 50 minutes chart, we can see that there we are holding some support around 18K, around 18K. And we are now in a bear market, and we have seen falling prices from 22K drop to 19K, and we are currently facing some resistance, and potentially we might see some price falls, and it's not looking good. It's not looking bullish. It's actually looking bearish at the moment. And if we look at Ethereum, we also see similar price chart patterns, and we have been down 3 to 5% from 12K. That's a drop of 16% from 8th of July to now, and we are seeing some resistance. Major resistance is around 11K because it's in the middle of the drop. And also, since the Fed raised interest rate, we have seen the falling prices of commodities like we have seen oil dropping, and also gold and silver. We have seen falling prices of these commodities. Actually, the macroeconomics is actually quite bare at the moment since the Fed announced that the interest rate, they curbed the interest rate, and also we are not seeing some bullish signs of U.S. stocks. For example, if you look at SPX, we are seeing a major resistance. We draw a line here. It's not looking very bullish, and right now, as for Bitcoin, Dave, do you think that it's currently storing some momentum for the upside, or do you think that it's going to hold the support and consolidate for a while right now? Because the SMA 50 just crossed 100 SMA, and people gonna think it's actually not looking very bullish at all.
Yeah, I pretty much agree with you. It's like, like after the Fed is going to, like hike, 75 points interest rate, the market is actually quite, bearish. It's like if you look at Doge, the little big Doge and the little small Doge in the next slide, so we can have the momentum trading on Sunday and Saturday, and the follow through, so like on Monday, we usually have the momentum follow through from Sunday, then if Sunday is having a big drop, usually Monday has a tendency of a drop, So I pretty much agree with you that we are actually in a downtrend. But I sort of like think of a moment, of a analysis. It's like from the 18th of June, 2022, we started to have a higher highs, a little high highs and high lows. So pretty much we have to be aware of that. But overall, I think it's pretty bearish. So we may have to see a little bump, like tonight or tomorrow. But that's pretty a probability. So what do you think about the market, Johnny?
Do you think did you just mean that we are currently having a potential to forming a relative bottom around 19K, something around this price level for Bitcoin? Because last time it dropped the lowest the leg down is 70K, and we might potentially retest that area and shoreline here. We might potentially retest that area, and if we successfully hold that support, and then we probably can see some nice rebound to the upside. That's some possible scenario that's gonna happen. And if we look at the bigger picture, it has been respecting the trend line all the way from 44 45K, from 45K all the way down to 20K. It has been respecting the trend line and also the moving averages. For example, if we look at here, if it touches the 200 MA moving average, a great resistance to the price development. And yeah, that's the current situation of Bitcoin, standing at 19K, around 20K. And let's move on to some on-chain indicators that we are going to bring you some on-chain value for you guys. Let's pass to Dave.
Yeah. So if we look at the next slide, like yeah, we can see that this is what I want to present to you, the Mr. Monday Dumb Doge. He has a bigger Doge, in a small Doge for a Monday Pump. What I want to represent is like if you want to know about Sunday, this behavior of Sunday. Usually Monday falls through if there is no very important event. If there's a probability that for example, like the Fed is going to announce like the CPI indicator or the ISM manufacturing index. So probably we are going to have a worse or a more of a downtrend if Sunday is going to had a a downtrend. So let's move on to some sort of on-chain indicator.
Yeah.
So the market is going to is not going to change for a behavior and emotion. What I want to tell you guys is like we always have the loss aversion. What is loss aversion? It's like if you look at this chart, it's like the x-axis is the horizontal line, is pretty the profit and loss, and the vertical line is usually the value. And when the value decreases a lot, not a lot, and at the same extent of the value increase, usually people feel as much twice as much bad as the profit. It means that usually people are panic when they see their price falls. So taking considering this factor, I think the market always has the transaction or the transfer of wealth from weak hands to diamond hands. So the weak hands are those who are overseeing the market at the sort of at a bad emotion, and they sell at a lower price and buy at a higher price due to loss aversion. But on diamond hands, they are the wealth, and they usually, they trigger the P&L and the loss aversion so that they can capture the value from these people who sell as a loss. So taking into account of the three cases of the on-chain indicators. So let's move on to talking about the stream index. So why do we have to have this stream index? Is because we really want to understand how many weekends are going to sell or already sold their positions, their Bitcoin or their ETH. So we gotta gather the wallet holdings, so that we can know how many weekends selling at the bottom, and through backtest and also analysis from 2015 to now, like 2022, you can have a lot of indicators. And for the time being, I think the most efficient ones are the tiny stream indicator, stream indicator, and well Degen indicator, and follow with the overall analysis of the Degen indicator and stream and Degen indicator. So let's explain why do we have to classify into the streams or the degens into like three categories or even five, with the overall degen indicator and overall stream and degen indicator. So it's like what is this indicator indicating? They're indicating market psychology. The same behavior always happens at market lows, but it doesn't mean that it's bottom. So when there is free fall, when price plummet, we can see that a stream usually goes with the sun pressure. So and the proportion of the wallet address or wallet numbers of the particular group, usually like 0.01 BTC, to 0.1 BTC, they actually have a behavior of selling at a loss, or they have a big proportion to the net sending address. So it's like there are usually like three cases, like relatively, but the number of total sending addresses are small, so or when indicators hit up. So this is what I'm going to talk about in the later slides or later scenes, that I think there is a massive increase in the particular group of wallet address. For example, if the number one is the tiny stream indicator. So if the indicator hits up, a relative bottom is going to form, and with combination of other indicators that the number of wallet address of that 0.1 to 0.01 Bitcoin, these wallet address are trending higher. Or there's another case that in this probability, both the total sending address decreases and the particular group wallet number increases, and that indicator is going to spike. So this is a third scenario.
All right. So Dave, basically, the indicator is is derived from market players holding different, Bitcoin amount of Bitcoin in the addresses. Number of addresses is, divided by, the active sending address, the number of total active sending address, and then we have a ratio here, right? And then in first scenario, if we have, the market players, the number of addresses holding less than 0.01 in the first case scenario. If we have number of market players holding less than 0.01 Bitcoin increase, and then we have the indicator, the value of indicator also increase, right? If we have, the total actively sending address number of that address decrease, and then we'll also see a spike in the indicator value, right? It actually can, refer to two or is a combination of possibilities, right? There's first case scenario, second case scenario, and also we have right? Did I say that right, Dave?
Yeah, I think so. Yeah, you're pretty much right. Of course, we're talking about the two or the three scenarios. So, we have to take account into, three indicators. At first, is the tiny stream indicator. So the tiny stream indicator indicates the amount of the number of players that is holding less than 0.01 Bitcoin, and developed by actively sending address. So the active sender address is like a big pipe, but on the small pipe or in the big pipe is like we're measuring how many active players holding that sort of BTC that's less than 0.01 BTC that is paying actively on the market. And for the indicator two, the stream indicator, so is going to measure like how many market players is holding from 0.1 to 0.01 BTC that is actively playing on with the market, or more people or more players are going to enter this particular group of stream indicator. So for the third indicator. So it's pretty, Degen is like the well Degen indicator. So for the well Degen indicator, we'll classify that into the group of the market players holding, from, 1 BTC to like 10 BTC. And, it's also divided by with the proportion, in consideration of active sending address. So in overall, there are two indicators to indicate, whether we are going to, enter the price, no investment advice though, that we're going to see a probability of the bottoming or a relative bottoming of the market. That is the Degen indicator. Is measuring the market holding group with the Bitcoin address holding from 0.1 to 10 BTC, while the big part is also the active sending address. And the overall, the following, the stream and Degen indicator, where market players holding from 0.01 to, 0.01 to 10 BTC, and the big part is also the same, active sending address. Yeah. So we're going to start, talking about the behavior of the, tiny stream indicator. So if
Yeah.
we look at the chart, for the on-chain
Yeah.
indicator, so we
Yeah.
can have an overview of the money volatility. So John, how do you think about the general volatility of the market with respect to these five indicators?
Yeah. So from my observation, I can see that particularly in July 2021, a lot of volatility is happening over there. As you can see, you know, these indicators seem to move, accordingly, but they have different behavior, of course, but they tend to move similar to each other. Some might increase to a larger extent, some might not. Some might decrease to a larger extent, while some might not. And we are going to, look into compare the increases and also decreases of these indicators to find out, what types or what groups of what different groups of market players are actually behaving during the particular time, with respect to, the price change of Bitcoin. And also I have one more observation is that when, the indicator, spikes when it goes up, we can correlate it to, relative bottom of Bitcoin. Am I right, Dave?
Yeah, sort of, so these indicators are also behaving, in the relative sense that when they spike, usually there is a relative bump. But again, like no investment advice. But you can see that when they start to U-turn, they just, get to all-time high or a new high, and they
Yeah.
get to U-turn and get
Yeah.
down. So usually that's the sort of the concurrent indicator or the sort of relatively leading indicator to indicate a macro or a midterm bond. So let's start looking deeply into what these indicators are actually looking like. So
Yeah.
so the first indicator is the tiny stream indicator. So I'm going to be fast in talking about this tiny stream indicator because it's behaving in trending higher and higher, and it doesn't provide a relative value for people to follow. But one sort of thing that I can address on is the more or the higher it goes, the better it is on the market. Let's look on the next one, the stream indicator. So for
Yeah.
the another one, stream indicator, we can see that the blue or the blue line, they are relatively hitting at a value of 4.8 or 4.78. That's the relative value. And what does this value mean? It means that at this relative bump or a kind of market volatility, when price is going to fall, a group of the so we are talking about stream indicator, a group of players that is holding from 0.1 to 0.01 Bitcoin, and they are actively trying to participate in the market, or more people just come in to play, or the more people just enter the particular group, and this particular
Oh, yeah.
group is 0.1 to 0.01 Bitcoin.
Yeah.
So
Yeah.
that's what I think. Like if you look at the chart, it's like in January 2019, we can see a relative spike. Even like after the all-time high at January 2018, after the the all-time high, we can also see the spike. And when the indicator spikes, there is a red bomb. Usually it's like sort of like leading indicator. It's so amazing that um this is a market behavior and doesn't change even from Wall Street now to the crypto market. And also we can see that when there's a red bomb in the COVID 19 event in 2020, March, April, we can see there was also a spike of the indicator. So if market players are actively looking at the on-chain indicators, they may be able to profit from the market. So what do you think about that? The stream indicator, Johnny?
Yeah, so what I learned from these two indicators is that for first of all, the tiny shrimp indicator, we can deduce that number of the number of holders, Bitcoin holders holding less than 0.01 Bitcoin. Number of this group of Bitcoin holders is increasing, right? It's increasing over time all the way from 2017 to 2022, right? The number of people, actually we can deduce that more people get into this cohort, right? Getting into holdings less than 0.01 Bitcoin, or we can also deduce that number of actively sending address decreases relatively to the increase of market players holding less than 0.01 Bitcoin, right? And as for the shrimp indicator, historically, we can see some, it is respecting, the market relative market bottoms, just like you said, when it increased to the level of 4.8 around 4.8, we can, we can see that a relative bottom, is forming around that level, right? That price level, right? And but in my opinion, just because um, uh, this happened in the past historically doesn't mean that it will, promisingly happen in the future, right? Nothing is promised. We can't tell the future. We can just, tell the possibility that this particular behavior is going to happen again. The possibility of this happening again is greater because it respects, we backtext it. It actually respects the data we found and the price, his historical price. And yeah, we are seeing a spike of the shrimp indicator, probably already over 4.8 level. And does it really, really indicates that a local bottom is forming around there, forming around the price level we're actually sitting right now? Maybe, right, Dave?
Yeah, maybe. Yeah, I
Yeah,
think so. It's like when we just look at the stream indicator, that's the second one of the bull line. That I think that more people are entering to the particular group of
yeah,
like 0.1 to like 0.01 BTC,
yeah,
and either is the case or the active address is decreasing. But to my point of
yeah,
view, it's like when the market is trending to a relative bomb, more people are going to
yeah.
sell. So
At a
when
loss,
more
you
people are,
mean?
yeah, at a loss, or the amateur
Yeah,
players are selling at a loss. So we're going to we aim at measuring that relatively to the whole market. So
yeah,
I think like we also have to combine this stream indicator very importantly with other indicators like the SMA, technical analysis, or the momentum
yeah,
analysis like rate of change, RSI. That's the pretty much every indicator we are going to have to increase the probability of winning. So
yeah,
let's
yeah.
move on to the Degen indicator.
Well, Degen indicator. This sounds interesting.
So this well-digit indicator is like measuring a relative, wealthier, individual or degen, in the crypto market, cryptocurrency market. So what is well-degen indicator indicating? So this indicator indicates, the number of market players holding from one, Bitcoin to 10, like Bitcoin, over, a active, buying or active selling address. So these indicators are very important. Like every time when there's a macro bomb, usually when they're wealthier, the gens or wealthier streams are giving up. It indicates that the market is at a very deep depression, and when that depression happens, usually the whales are picking up on the market because the whales are not going to sell at a panic price, right? The whales are going to buy or absorb the volatility by buying
Yeah,
at a low price, and later on like 1 year or half a year, 1 year, 2 years, or even 3 years, they're going to sell at an all-time high and get out, or just get in at a lower price. This is like how the market moves. It moves. So when you take a deep look at January 2018, it spikes. At
yeah, yeah,
July 2018, it spikes where the bomb like I like in January 2019 spikes again.
yeah.
Or even
The
from the
spikes. Yeah,
bear market. Yeah, it spikes. So even like in the bear market, like July 2019 to like January 2020. So when we look at that, in the bear market, it's pretty much happening at a similar way with what we are dealing with now in the bear market. And even though it spikes, there is it acts as a leading indicator to indicate a relative bomb. So what do you think about this indicator, Johnny?
Um, so, two information that I can know from this indicator, first of all, more market players, come in holding 1 to 10 Bitcoin. So there are more people holding 1 to 10 Bitcoin, during the relative bottom of that, particular period. That might be because that, people are selling at a loss. Originally, they are holding more Bitcoin, but, after the market plummets, and then they have less Bitcoin in hand, and then they just move to the downsize the group. You know what I mean. They held less Bitcoin after the market plummet, and as we can see from the chart, it can have some reference as a leading indicator. For example, as we can see from in July 2021, you know, before the market really hit the bottom, the value spiked to 1.46 around that level. And then after that, we can see the market bottom out in July 2021. But however, as if we look, previously, in the bear cycle of 2020, is lagging but not leading. So I think whether it's a really leading indicator, I still have some doubt in it, but I think it overall it respects the information that it gives, that it shows that a relative bottom is forming around the price level when it moves up in its value.
Yeah, pretty good, pretty good. So yeah, I really like that value of 1.46. That the value of the indicator is so amazing that after all these years, 2017, 2018, 2019,
Yeah,
2020 COVID event, like 2021, market relatively bottomed out. We can
yeah,
see that in a lot of indicators they're not trying to tell you that it's bomb. But after our quantitative research, well,
yeah,
last year it bottomed out, in the price level, similar to like 1.46, value. When the
yeah,
indicator hits up this value, a relative bottom is forming, so it's very useful. It's very,
yeah,
indicating. So we also have to combine with other indicators, So
yeah,
like what you said, Fibonacci ratio, the technical
yeah,
indicators, the parallel lines,
yeah.
these are also
Hey, but
important
Dave,
to
yeah,
come.
I have a question. And I just found that the well indicator, when we compare it with the shrimp indicator, and the recent price level, we can see the well Degen indicator does not increase as much as that of shrimp indicator, right? We can see the shrimp indicator currently is, you're catching up with the previous bottom, right? it increases relatively higher than that of the well Degen indicator. And let's think about it. Maybe let me guess. The reason for this is maybe because the total sending address is fixed, right? Number is fixed, so the difference must come from the number of players holding that particular group of Bitcoin. For Shroom indicator is 0.1 to 0.01 Bitcoin, and the difference may be due to more people come into this group, 0.1 to 0.01 Bitcoin. And for this chart, this indicator, less people, I mean, relatively to the Shroom indicator, less people relatively come into this group of people holding 1 to 10 Bitcoin. Therefore, we can see the increase of this recent spike is not as great as that of Shroom indicator. Um, what do you think about this assumption?
Yeah, this assumption is based on, like we assume like when more people are giving up, they tend to sell and hold a less amount of, particular group of the Bitcoin. So maybe originally they are like a wealthy chain, like the number of people that are holding like 1 to 10. Maybe they hold 5 Bitcoins, so that they were originally a wealthy gain. But when time passes and it's going to have a very shortcoming, a downside of the market, they sell a loss, so they assume they are holding a relative bomb of the number of address. It's like they may maybe holding 0.05 Bitcoins they gave up. So we tend to measure how many
Yeah,
people how many players are trying to sell it as a loss. There's a great
yeah,
assumption
yeah,
that have a probability of finding a bomb, or finding how many people are trying or attempting to give up. So right now we can see that as what you said,
yeah,
it's like the stream indicator is hitting up,
yeah,
is hit way up like all time high, but looking at the
yeah,
blue line, the wealthy Degen
yeah,
indicator, it's not indicating that people are selling as a loss and they fall into that particular group of 1 to 10
yeah,
Bitcoins, and that's
yeah.
concerning. That maybe there's a chance of capitulations that we'll have to see on the market. But that's not for sure. That's just a probability. So how do you think about the probability of capitulations, Johnny?
Yeah, because the Fed is still curbing the interest rate, and we expect to see interest rate keep rising in the coming months, and people are bearish to the overall market, and there are saying that we have already entered a recession period. And under this bearish macroeconomic environment, I think there might be more capitulation coming ahead, but it's not a must, yeah, right? Because no one can tell the future, right? Because we can just deduce the possibility of a certain event happening in the future. We can only tell the possibility is greater than 50 or lower than 50, or we can even tell accurately. So yeah, I think these indicators really tell us about what different groups of Bitcoin holders are doing, are behaving at different time period, at different with respect to different price levels. And these are very good references for us to to analyze what people are doing at the time. Are they selling? Are they holding? Or are they actively sending their Bitcoin to at a loss, or without a loss? I think this can let us study the behavior of different groups of Bitcoin holders. I think they are really helpful, and yeah, that's what I think. So yeah, not investment advice though. I think Dave. I think I think you also think that these indicators can provide a piece of information about entry points for DCA, right? For
Yeah, I
yeah,
think I think, yeah, pretty much right. I think like it's important to know that when the value spikes, if you just all in, let's say just all in, so yeah, pretty
You
much a
can't
big
catch
degen,
the problem.
degen, but it's not going to work. It's like what I'm telling you is like the bomb is forming, but it has not formed. The very important thing is that. So when you see the indicator spikes, you have to keep an eye on your bomb. So you know if you know that the bomb is forming, you're already better than most of the market players. So
Yeah,
combined with other indicators like the thing that Johnny is going to talk about, the SSR, CVD, and stuff, we can pretty much guess what market is going to have. So when we go back to DCA.
yeah,
So what is DCA? It's like dollar cost averaging. When you go on with a bet, never just all in on the all portfolio on one direction with the buy side experience. It's like um, if just all in a portfolio in one position, the risk is 100%. So you're not going to manage a 100% risk portfolio just all in one position. The most important thing is like you have to keep an eye on whether the indicator is going to have a U-turn signal. When it starts coming down, but not going up again and again. When it starts, have a U-turn to come down to the floor. You know, it's very important that you have to, place a bet on the portfolio,
yeah.
but no investment
I
advice.
think that the U-turn signal actually tells us, about the sharp change of the behavioral pattern of different groups of market players, and it serves as a very good piece of information for us to, to realize that particular price level may become, a relative bottom at that area and at that particular time period. Yeah, and it's very important that you always diversify your portfolio and don't go all in. Make sure you do DCA because it leverages down your risk, and you have less risk in your portfolio, and you will do better overall. Yeah.
Yeah, absolutely,
So
bro. Just don't all in, like Warren Buffett said, be bust when everyone is buzzing, or be bust when everyone is sus, So, buy when others are fearful, or, so
yeah,
it's like reverse indicator. So, if we're going to, press the button or press the, to buy BTC, when BTC cheap with solve an indicator, Jim Cramer is actually saying, BTC is so bullish. So it's like a reverse indicator. So if you go into like any kind of Twitter, or Degen or Reddit post, you're gonna see that everyone is talking about reverse, dream framework indicator. No investment advice though, Johnny.
yeah, just a piece of reference, a piece of good reference, not an investment advice though. Yeah. So let's move on to another indicator that I'm going to talk about is actually the SSR indicator, aka stablecoin supply ratio indicator. It's actually derived from, we have Bitcoin, the total Bitcoin market cap divided by the stablecoin market cap. And the stablecoin market cap is composed of, a lot of major stablecoins that are being, traded in major exchange. For Bitcoin, for example, we have USDT, USDC, we have DAI, we have TUSD, etc. A few to name. And we in the denominator we'll have these stable coins, the market cap of these stable coin combined, and also we have the Bitcoin market cap divided by this group of market cap, and then we have this stable coin supply ratio. So what this ratio tells us about is that, imagine if there is a large amount of stable coin compared to Bitcoin relatively, if there's a very large amount of stable coin available for purchasing Bitcoin, and what it tells us about is that the price of Bitcoin can be purchased readily on the market, right, on the exchanges, because the stable coin, the only way to purchase Bitcoin is by stable coin on exchanges, right? And then if we have abundant amount of stable coins available, the Bitcoin price can be pushed up readily, relatively. On the other hand, inversely, if we have if we have insufficient amount of stablecoin, but we have a very big amount, a very great Bitcoin market cap, and then what it tells us about is that actually, in inverse methodology is that people will tend to sell Bitcoin for more stablecoin readily because the abundance of Bitcoin is very is high in the exchanges, and on the other hand, we tend to understand that when this ratio reaches the bottom, and we tend to think that actually the market bottom is near around the area. We can also see that we have the upper band and the lower band. We can have these two bands by the two standard deviation. When the SSR reaches the lower band, for example, we have that in this area in 2018, and then when it reaches the low band, we can see that a relative bottom is forming around that price area. It actually tells us that a lot of stablecoin in the market is available for purchasing Bitcoin, and that's where the bottom is forming around there because people are selling Bitcoin for stablecoin, right? That's why we have so many stablecoin in the market, and during the bottom, we actually have to flush out the excesses so that we don't have extra selling pressure around the area, and that's how a bottom is formed because all the sellers have already sold, and that's where bottoms are formed. And as we can refer to another bottom in 2020, in July 20, in June 2020, we can also see that the SSR moves down and reaches the lower band, and it actually illustrates that a lot of stablecoin are ready in the market in exchanges because and they can be used to purchase Bitcoin readily, and that's how a bottom is formed around that price area. And if it reaches the upper band, for example, in Jan 2021, it actually tells us that the total market cap of stablecoin is actually relatively lower. Is lower than the previous cycle, and we can also see that this area is actually telling us that Bitcoin price may be forming a relative high at the particular area, because we can see that the SSR keeps respecting the upper band and lower band. We can tell from the historical pattern that it respects the bands, and if it respects the band, then we can deduce that in the future it has a tendency to respect the band again, and that's why we think that is a useful indicator telling us where the bottoms are found and where the highs are found. So currently we are sitting at a relatively low value of SSR, and we have the SSR approaching the lower band, and what it tells us is that we have a large amount of market cap of stablecoin ready to purchase Bitcoin, and because people are not selling, people are selling the Bitcoin for stablecoin, that's why the market cap of these stablecoins are staying very high level. Also SSR is a very useful piece of info. It is a very useful indicator. It provides very helpful piece of information for you to determine, for you to predict, to determine, and also to realize that maybe a bottom or a high is forming around different price levels, and we can use it together with other indicators. For example, the ones that they've shared with us, we can also analyze this SSR indicator in accordance with different behavior patterns of different market players holding Bitcoin, and that's how we together they can provide a better, more comprehensive information for you to make a better decision. So let's move on to another indicator that I would like to share with you guys. This one is CVDD, aka also known as cumulative value days. Days destroyed is actually modeled by Willy Woo, a DeFi analyst. This CVDD indicator can be found on the charts provided by charts.woboo.com. Is actually composed by Willy Woo, and I yeah, just give credit to Willy Woo for making this wonderful indicator. This is really helpful for us to to realize the bottom of Bitcoin, and we should now look at the purple. The purple one is CUDD, and the orange one is actually the realized price. And if we use CUDD together with realized price, we can actually see the area where accumulation happened in the past. For example, in 2019 January, the price when it falls below the realized price, and but it stays above the CVDD, and then we can know that this might be a good area for accumulation, because the price has been respecting this indicator, this model. The price has been respecting this model, and therefore currently the price is sitting below the realized price and also above the CVDD indicator. It can actually mean that the price can dip lower. Capitulation may be coming ahead, because there is room for falling price is below realized price, but it's above CVDD. And how we will divide how we will compose the CVDD indicator is that CVDD is actually referring to coin days destroyed. When Bitcoin is transacted from an old hand to a new hand, it actually carries the value of the value at that transaction, that the transaction time, at the time, the value of transaction, and also the time that the Bitcoin is being held by the previous owner. And we will derived this value with together with the amount of time that the Bitcoin is held by the previous owner, and then divided by 6 million times the age of market. And then the 6 million is actually a calibration to compose this model. And after the calibration, we can see that the model, the Bitcoin price actually fits into the model. If it fits into the model, if we can see the price has actually been respecting the model, and then we expect that it respect the model in the future too. And that's why at the current situation, we can expect that there is a possibility that the price can fall lower, because it has not touched the CVDD level yet, but it's below the realized price, and therefore maybe it's a possibility for the entry of DCA. And this might be a good reference point for you guys to to take into account of your investing strategies. Yeah, so make sure, if you are interested in learning more about how the model is computed, you can actually visit Willy Woo's Twitter, and also you can Google Willy Woo CVDD indicator, and you can find more information about this model. It's really helpful. Yeah, so moving on, we have some news in the last week. So in 6th of July, there's a news coming out that really depressed the market, because the MT Ghost exchange and OG exchange origin. So let me tell you the story of this news, the background, the background of this news. So in 2013, 800,000 Bitcoin was stolen from the exchange, the MT Ghost exchange. And their client, their customers actually lost their Bitcoin. And 2014, some Bitcoin, 200 Bitcoin, 200,000 Bitcoin were found, and and then uh, the empty goals exchange actually, they had some legal disputes with the clients, and it's actually, dealt in the court of, Tokyo. It's in Japan. It's going through some legal process about, repaying the stolen Bitcoin to their clients in 2013. So now, right now, in July, in 6th of July, the Empty Gods Exchange just issued a notice to their clients about the repayment schedule, the rehabilitation plan, aka the rehabilitation plan. The district court of Japan, ordered a demand that the Empty Gods Exchange, needs to repay the stolen Bitcoin to the clients, and right now it's open for registration. So if you have if you had an account open back in 2013, very long time ago, in Empty Gox Exchange, and then your Bitcoin was stolen in 2013. So now people are those people are now registering for the redemption of their stolen Bitcoin, and it's now going through registration process and also some validation process, because the exchange gonna validate if these applications are valid and legit, and then they will have some some process to go through. They have to review the applications, and the customers can either receive Bitcoin Cash, or USD. And is the empty cost is going to repay around 130,000 Bitcoin to the customers, and that's actually a quite a large amount of Bitcoin. We can deem it as a supply, and people are worried that this great amount of Bitcoin will pose a selling pressure to the market, and people are worried about it. And we are also paying a lot of attention to this event, and let's stay tuned to how things develop, because it's still in an early stage. The Empty Cost platform has not announced details about the repayment schedule, nor it hasn't fixed deadline for the registration. So right now it's still an early stage of the rehabilitation plan. So we have to pay more attention to how things develop with the empty cost repayment schedule, because if they release the amount, if they release a large number of Bitcoin to market, that might pose some selling pressure to the market, further depressing the market, which is we don't want to see this happen in the future, because hopefully the clients will hold the Bitcoin. We hope that they don't sell down in the market. So that's what the news is about, and let's stay tuned to how things develop. So moving on, we have some nice NFTs. I'm going to, I just came across the Saudis NFT on OpenSea. It's actually trending on Twitter too. If you search maximum bidding, you'll find a lot of funny memes about the Saudis NFTs. The memes are all about there are rumors that the Saudis are actually buying the dip. If Bitcoin falls below 18K, the Saudis the Saudis are going to buy back the dip, and they are going to put maximum bid thing. That's funny, I think. Uh, yeah, you can, if you're you should go on Twitter and search mass bidding and Saudis, and you will see a lot of interesting, very funny memes on Twitter. It's trending, and as the NFT, the Saudis NFT has actually just launched a few days ago, and it has already acquired a 6.5K trading volume. And you can see the style of this NFT is actually quite similar to that of CryptoPunk. It's actually a derivative of CryptoPunk, and it's trending now. It's hard, and people are loving the memes, and enjoying the vibe. I think you should also, see the video, the meme video that the Saudis they tweeted a video which is very funny, and I think you should check it out. Yeah. So well, yeah. Moving to the last section, we have a candy drop event. So candy drop is the most popular, ICO subscription event, and we'll allocate tokens for participants. If you have a trading volume of any assets in the last 3 days exceeding 100 USD, and first of all, if you want to qualify for the participation, and just like what I said, you should, for the last 3 days, your trading volume should reach 100 USD, and you reach the second daily average trading volume of 100 USD, you will get another chance to participate. And once you met the requirements, you can enter the new listing area, select the candy drop, which round you want to participate, and then you have to register it in the Huobi app. And please check that your daily average spot trading volume. If your registration is unsuccessful, maybe you don't have enough trading volume, but 100 USD is not difficult. And we will distribute the candy drop tokens will be randomly distributed to registered participants. Winners will receive the tokens for free, and the token prices will be delivered to winning spot account. So after you register, make sure you check your spot account. And yeah, let me tell you a winning tip. The winning rate is actually calculated based on trading frequency and also asset balance. So the more frequent you trade, the higher possibility that you're gonna get the candy drop. So make sure that you have more trading volume. And also the candy drop launched Lucky Star activity. There'll be one participant selected from the candy drop round as our candy drop Lucky Star, who can enjoy special airdrops worth of 1,000 USDT. So the candy drop Lucky Star will be noticed via SMS notification and pushing box and pop-ups from Huobi app. So make sure you check it, frequently. So the lucky winner needs to email Huobi customer service about how she can receive the funds, how she can receive the rewards. And the lucky star will be also invited to join a Huobi Live where they can share the experience with Huobi's candy drop activities. So make sure you stay tuned to the candy drop. If you have any questions, you can just email to our customer service, and they will happy to answer your questions about the candy drop. So make sure you have enough trading volume, and make sure you register for the candy drop event, so you get a chance to win the airdrop. So yeah, only one and also you should the candy drop double chance coupon is valid for 3 days only, starting from the receipt day. So the coupon is actually for non-award winners who will receive the coupon, and it will help the winners to win double rate and odds in round. and the round and the odds will increase to 100% after using it. So make sure you use it. And last but not least, please remember the above points when using candy drop double chance coupon. Yeah, so basically, that's the end of this weekly market chat, and I want to thank you for watching, and we would like to, see you all next time. If you are interested, please, click the campaign link to visit our new listings section, and also sign up for Candy Drop because we're dropping free airdrops. And also stay tuned to our Lucky Star events. You might become the next Lucky Star. Yeah. Thank you all.
Thank you all, bro. Thank you, Johnny, bro.
Yeah.